So in this video, I'll be discussing some of the reasons why many quote-unquote experts are predicting a major economic downturn or even collapse may take place in China. We'll begin by examining China's economic problems, then explore some possible causes of their rapid descent. So starting with the economic problems, so China's economy has actually been one of the fastest growing in the world in recent decades. In 2020, China's GDP was $14 trillion, making it the second largest economy in the world, behind the United States. However, due to the pandemic that occurred, China's economy kind of slowed down, with the GDP growth rate at 2.3 in 2020, which is the lowest rate in decades. So it pretty much had a very fast boom and then a very fast decline very shortly after. China's economy has been facing a number of problems in recent years. One of the main problems is the country's high debt levels, which have risen rapidly in recent years and could pose a risk to future economic growth. According to the Bank for International Settlements, China's total debt to GDP ratio was around 260% back in 2020, which is among the highest in the world. This high level of debt could make it difficult for China to respond to economic shocks and, in theory, could lead to a financial crisis. Another major problem is the ongoing trade tensions with the United States and other countries, which have disrupted the entire global supply chains and hurt Chinese exports. This quote-unquote trade war has led to tariffs on Chinese goods and a decrease in exports, which has had a negative impact on China's economy. So next up would be their real estate sector. So China's real estate market has been a key driver of the country's economic growth in recent years. However, it has also been a source of concern recently due to a number of problems. One of the main problems is the oversupply of housing, particularly in smaller cities and rural areas. The government's efforts to boost housing construction to support economic growth has led to an oversupply of housing units, which has led to a decrease in property prices and a slowdown in the construction industry. Another problem is the high levels of debt associated with the real estate market. Many developers have been heavily reliant on borrowing to finance new projects, and a decrease in property prices could lead to defaults on these loans and a financial crisis. For example, Evergrande Group, if you don't know, is China's second largest property developer by sales, was actually declared to be default in late 2021. The default of Evergrande Group has also led to concerns about the potential ripple effects on China's entire financial system, as the company has significant financial links to banks, insurance companies, and other financial institutions. Furthermore, there is also a problem of ghost cities, which refer to large-scale developments with little to no population. These developments have been a drain on resources and have led to a decrease in the value of real estate in these areas. Overall, China's real estate market is currently facing a number of problems, including oversupply, high levels of debt, ghost cities, and regulatory challenges. These problems have led to a slowdown in the market and have also had negative effects on the country's economy as a whole. So moving to the next reason, it would be social unrest. So on top of strict, inhumane pandemic policies, political repression and human rights abuse have also been a major cause of unrest in China. The Chinese government has been criticized for its treatment of ethnic and religious minorities and for its restriction on civil liberties such as freedom of speech and the press. This has led to protests and demonstrations by citizens who feel their rights are being violated. There has also been growing discontent among the people about the lack of transparency and accountability of the government and its institutions, as well as the lack of participation in the decision-making process. This has led to a lot of protests and a lot of citizens being unhappy. So protests and unrest can disrupt business operations as well as lead to a decrease in economic activity. For example, factories and businesses may be closed or damaged during these protests, which can lead to a decrease in production and a loss of revenue. Social unrest can also lead to decreased consumer and investor confidence. Consumers may be less likely to spend money if they feel uncertain about their safety or the stability of the economy. Overall, this can lead to a slowdown in economic growth. It also can lead to increased costs for businesses as they may need to spend more money on security or insurance to protect their assets and employees. This can eat into profits and make it more difficult for companies to invest in new projects or expand their operations. If this continues to escalate, it can lead to a decline in foreign investment as investors may see the country as too much of a risk or possibly unstable to put their money in. So lastly would be the impact on the rest of the world. So China's potential collapse could have a very significant implication for the entire world pretty much. With the world already facing a major recession, a collapse in China could lead to a further economic downturn that will be felt probably all around the world. This is because China is currently the world's second largest economy, as well as a major player in the global trade market. A collapse of the Chinese economy would likely lead to a decrease in demand for goods and services from other countries, which could in turn lead to job losses and economic downturns in these countries. Additionally, many countries have become heavily dependent on China as a source of manufactured goods. So a collapse of the Chinese economy could lead to disruptions in global supply chains, as well as shortages of certain goods. So I don't think the rest of the world really wants China to collapse. I mean, it would have very, very, very negative effects on the rest of the world as a whole. China's like a backbone for the world. Everybody imports from China. If you look at most of the goods that you buy or own, they more than likely say made in China. So a collapse of the Chinese economy would not be good for absolutely anyone. So in conclusion, it is difficult to predict with certainty the chances of China's economy actually collapsing. However, it is important to note that China has experienced significant economic growth in recent decades and has become a major player in the global economy. China has been investing heavily in research and development, artificial intelligence, 5G, space, and other technology advancements, which could contribute to a more robust economy in the future. The Chinese government has also implemented various economic policies that promote growth and stability. As with any economy, there are risks and challenges that the economy faces, and no economy is immune to shocks or crises. The entire world actually is experiencing an economic shock. However, the Chinese government's ability to intervene in the economy, its large foreign reserves, their large domestic market, and potential for innovation are some factors that could help to mitigate the risk of a collapse. There would be some extremely negative effects on the entire world if China collapsed, as most of the world depends on China for most of their important needs, actually. This is why these predictions may be slightly overblown or thrown out of proportion, because I don't really believe the world can afford for China's economy to collapse. But that's going to do it for this video. I hope you found some value from it. Maybe consider dropping me a comment on what you think the future of China looks like. I'd love to hear about it. Also, leave me a like on the video if you did enjoy it. And be sure to subscribe for more videos just like this.